Katie. I'm a real estate agent in Boulder, Colorado. In my last video, I explained to you what a credit score is all about. And in this video, I want to help you understand what you can do to improve your credit score. And the reason why that might really matter to you is if you're thinking of taking out a loan in the near-term future, say maybe you're thinking of buying a house, that can really make a difference in the type of interest rate you can get on your loan and the types of terms attached to that loan. And if you're paying a 30-year mortgage, that can make the difference of tens of thousands of dollars over the life of your loan. So you really want to pay attention to some of these next points that I'm going to tell you about. The first thing you can do to improve your credit score is to pay your bills on time. Your credit score, about 35% of that score, is actually made up of paying your bills on time. And this is really important information to a lender so they can know, based on your past history, how likely, if they give you a loan, are you to repay that loan. The next thing you want to do is to keep your credit utilization low. People with good credit tend to keep that ratio pretty low. And what this means is you want to take a look at all of the credit, the loans that you currently owe, divided by what is available to you. So say you are allowed to have $10,000 on your credit card each month. That's what you want to divide it by. People with good credit tend to keep that credit utilization rate to at least 30% or lower. And people with really good credit usually have that at about 6% or lower. The next thing you want to do is to be prudent when applying for a loan. People with good credit tend to have a pretty good mix of credit, different sources of loans that they've had and that they've paid back. And now each time though you're applying for a loan, someone is going to go and pull your credit report to figure out how likely are you to repay that loan. And each time someone pulls your credit score, that's going to lower your credit temporarily. It's not that long, but it really makes a difference, which is why you want to be certain that if you are to go apply for this loan, is this really a loan that you need, and is it really something that you can be sure you're going to pay back each month on time. And finally, you want to keep track of your credit score. And there are two reasons why this is really important. The first is that each time you go and look at your credit report, you can look through it to make sure that there's no fraudulent information. You want to be sure that there's nobody who's taken out a loan in your name and it's not actually you. And then also you want to be sure that all the information in there is true. Sometimes it's possible on your credit report that there might be some information saying you didn't pay a bill on time. And if that's not true, you can go online and dispute that for free. And finally, why you want to pay attention to your credit score is because if you keep that score top of mind, it's more likely that you're going to make decisions that positively impact your credit score. And you can go online for free once a year and check this number. Anyhow, these are some of the things that you can do to actually really increase your credit score over time, and it's something you should really pay attention to if you're thinking of getting a loan in the near-term future. Thanks so much for watching.